Good evening and welcome to the Papyrus Global TV Energy and Economy Bulletin. I am Christiana Babayo. Tonight we bring you a deep dive into Nigeria's energy landscape and its economic pulse, from strategic gas expansion plans and investment inflows to new private sector solutions and critical infrastructure debates shaping growth and industrialization. As the global energy transition evolves, Nigeria is strategically positioning itself not only as an oil producer, but as a gas-driven growth center, a hub for industrial energy, and an investment destination. Here are tonight's top 4 headlines. Nigeria's Gas Master Plan 2026 signals a strategic pivot to gas-led industrial growth, backed by ambitions to unblock more than $60 billion in new investment. NNPC Ltd identifies $22 billion pipeline infrastructure need as critical to expanding domestic gas utilization and export capacity. Nigeria NLNG underscores that de-risking the energy sector is essential to attract new capital and sustain growth. Strategic agreements with Dangote Group subsidiaries under the Gas Master Plan are expected to strengthen industrial gas supply and support major expansion projects. And now the news info. Nigeria's energy strategy took center stage with further analysis of the 2026 Gas Master Plan, a comprehensive roadmap aimed at transforming the nation's vast natural gas reserves into a driver of industry, power generation, export capacity, and economic growth. Under the plan, Nigeria intends to accelerate gas production and move toward an integrated gas hub model that promotes coordinated development across key regions, instead of a fragmented project-by-project approach. According to the latest analysis, the master plan includes over 30 priority projects set for completion in the next 3 years and another tranche of infrastructure to be developed over the decade. The focus is both on domestic supply for power plants, industries, and compressed natural gas (CNG), and export markets that can bring foreign exchange. The plan's built-in flexibility allows gas hubs to route supply for domestic consumption or export under a commercial framework supported by the Petroleum Industry Act. Energy analysts describe this shift as a turning point that moves Nigeria's policy from sporadic investment to coordinated market-oriented implementation. Further details released today show Nigeria's gas strategy will require up to $22 billion in new pipeline infrastructure to unlock the country's untapped gas potential. This investment is needed to expand transportation networks that connect major gas fields to power plants, industrial zones, export terminals, and local markets, addressing a historic bottleneck that has held back utilization. Officials note that without a robust pipeline backbone, the country's abundant reserves, among the largest in Africa, cannot be fully mobilized for domestic economic use or export. Analysts say meeting this infrastructure target is critical to delivering on Nigeria's gas production goals of over 10 billion standard cubic feet per day by 2027 and 12 billion cubic feet per day by 2030. At a major conference session in Lagos today, executives from Nigeria NLNG Ltd reiterated that a low-risk energy sector is vital to attracting investment and driving economic growth. NLNG General Manager of Production Nnamdi Anowi emphasized that when energy projects are perceived as risky due to regulatory uncertainty or predictable policy shifts, investors often hold back, slowing capital inflows and delaying critical infrastructure delivery. He stressed the need for clear, consistent frameworks that reduce project risk and bolster confidence among domestic and foreign companies seeking long-term commitments in Nigeria's oil and gas space. Under the umbrella of the Gas Master Plan 2026, 3 subsidiaries of the Dangote Group, including Dangote Petroleum Refinery, Dangote Fertilizer Plant, and Dangote Cement plc, finalized expanded gas sales and purchase agreements with NNPC subsidiaries. These agreements guarantee gas supplies to support Dangote's Vision 2030 industrial expansion, ensuring cleaner energy inputs for refining fertilizer production and cement manufacturing. Industry stakeholders say these deals are among the 5 first they're among the first major examples of public-private alignment under the gas master plan and are expected to underpin job creation, value addition, and export potential. Beyond gas, Nigeria's refining landscape is also undergoing strategic reassessment. The NNPC Ltd has opened talks with international partners, including Chinese petrochemical firms, to revive state-owned refineries that have struggled with operational inefficiencies. Officials revealed that past rehabilitation attempts focused heavily on financing and engineering contracts, but lacked sustained operational planning. The new strategy emphasizes securing partners with proven operational expertise to transform refineries into profitable, self-sustaining assets. If successfully executed, this shift could significantly reduce Nigeria's dependence on imported refined products and improve the balance of trade. Energy sector investment momentum was highlighted at the recently concluded Nigeria International Energy Summit 2026, where officials noted a dramatic surge in oil and gas rig activity and new capital entry. According to official sources, crude and gas investment inflows totaling close to $10 billion have been unlocked, with average daily gas production recently surpassing 7.6 billion standard cubic feet, a milestone that supports both industry and power generation goals. The federal government's Project 1 Million initiative also aims to grow crude output while scaling gas to become a cornerstone of Nigeria's industrial energy base. Compressed natural gas, CNG, and other cleaner energy solutions are steadily gaining traction in Nigeria as part of economic and environmental strategy. While not breaking news today, long-term initiatives like the Presidential Natural Gas Initiative continue to drive infrastructure expansion, with the goal of increasing CNG refueling capacity and reducing reliance on traditional fuels. Analysts say wider CNG adoption could decrease energy costs for transport and industry while supporting Nigeria's transition to cleaner fuel use. Data from energy policy briefings and government releases indicate that Nigeria's energy sector received significant investment flows in 2024, totaling $6.7 billion, signaling sustained investor interest despite global market volatility. Breakdowns show that oil and gas activities account for the bulk of this investment, with dedicated funds also allocated to clean mobility and energy efficiency initiatives. Economists say these capital inflows are essential for productivity growth, export revenue, and strengthening Nigeria's position in regional energy markets. Nigeria's private sector continues to innovate around energy solutions, particularly through new renewables. Companies are expanding solar deployments and battery storage systems, and there is growing business interest in cleaner, decentralized power options that can complement grid supply, all of which are seen as important for broadening economic opportunities and stabilizing energy access. Tonight's energy and economic headlines paint a picture of a nation in transition, a pivot towards gas as a central growth engine, concerted efforts to modernize infrastructure and attract investment, strategic industry partnerships, and a growing private energy ecosystem supporting cleaner, more reliable power. From policy blueprints like the Gas Master Plan 2026 to practical initiatives on the ground, Nigeria is working to translate its energy potential into economic opportunity and development. That's the latest on Nigeria's energy and economy today. For more stories, in-depth analysis, and continuous updates, visit thepapyrusdaily.com, your source for verified news and expert perspectives. You can also send your questions, feedback, or story tips to admin@thepapyrusglobal.com. I am Christiana Babayo. Thank you for watching. Stay informed, stay empowered, and stay with the Papyrus Global TV.